You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 20th day of September, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. The first one, that's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, today's a great day. Go to mytradingiq.com, and at the top of the page, you'll see the link, no credit card required. Hit that purple button, fill out the registration form, hit submit. We'll get you indicators indicating today. You'll have the whole weekend to kind of get familiar with them, and then your trial will officially start on Monday, and you'll have all next week, Monday through Friday, 5 consecutive trading days. Now, if you're listening to this after the fact, never worry about what day of the week or weekend or hour of the day you sign up for the trial. No matter when you sign up, first we're going to get your desktop set up, your indicators indicating, and then the following day, that's when your trial will start. But you'll get 5 consecutive trading days, even if it stretches over a weekend. Okay? mytradingiq.com, top of the page, purple button. When the live training room ends each day, we take a 30-minute break, come back for the afternoon broadcast. This one, which unlike the morning broadcast, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, our daily schedule, we start out with our devotional, word of prayer, cover some of the global news, market news, recap of the alerts, the logic, the concierge. About 50 minutes into the broadcast, Michael will join us, give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for about half an hour. And then I'll wrap things up with our good word for the day. So this is the last day of our devotional topic, God's dream for your life. It's been 19 days. We'll start a new topic on Monday. Today's scripture, 2 Corinthians chapter 1, verses 8 through 11. I'm going to share with you from the Message translation. We don't want you in the dark, friends, about how hard it was when all this came down on us in Asia province. It was so bad, we didn't think we were going to make it. We felt like we'd been sent to death row, that it was all over for us. As it turned out, it was the best thing that could have happened. Instead of trusting in our own strength or wits to get out of it, we were forced to trust God totally. Not a bad idea, since He's the God who raises the dead. And He did it. Rescued us from certain doom. And He'll do it again. rescuing us as many times as we need rescuing. You and your prayers are part of the rescue operation. I don't want you in the dark about that either. I can see your faces even now, lifted in praise for God's deliverance of us, a rescue in which your prayers played such a crucial part. Again, that was 2 Corinthians 1, 8 through 11, Message translation. And of course, that was Paul's famous letter that he wrote, one of the letters he wrote to the church at Corinth. So, wrapping up God's dream for your life. Jesus turns your hopeless end into endless hope. That would actually make a good bumper sticker or t-shirt. In whatever situation you find yourself right now, what are you expecting God to do? Some of us aren't expecting Him to do anything. But God works in your life according to your expectation. That's called faith. Paul knew this. The Bible says in 2 Corinthians, this happened that we might not rely on ourselves, but on God, who raises the dead. He has delivered us, and He will deliver us again. On Him we have set our hope that He will continue to deliver us. Now, this is phase 6. If you went all the way back to the day we began this devotional topic, and they're all archived on our YouTube channel. There's over 2,600 daily episodes archived for your educational and viewing pleasure. But we went over the 6 phases at the beginning. Phase 6 is deliverance. The purpose of the dead end is to teach you to trust in God. Why does God let things get so bad and so out of control? So He can force you to learn to trust in Him instead of trusting in your own ingenuity and cleverness. What's the promise when you trust God? He has delivered you, He will deliver you, and He will continue to deliver you. When God delivers you in this last phase, He uses 3 different kinds of deliverance. Number 1, God uses circumstantial deliverance. Sometimes God miraculously alters the circumstance, and the Red Sea splits. That will happen many times in your life, but it's not going to happen all the time. Number 2, God uses personal deliverance. Instead of changing the circumstance, God changes you from the inside. You get a new dream, a new vision, a new attitude, and a new perspective. And number 3, God's ultimate deliverance is heaven. God has not promised to remove all of your pain in this world or solve every one of your problems. Because we are on earth, there is pain and sorrow and suffering. The ultimate deliverance will be one day in heaven, where there will be no pain, no sorrow, no suffering, and no heartache. There is only one way to get to heaven. Jesus said in John 14:6, I am the way and the truth and the life. No one comes to the Father except through me. When you're at a dead end, Jesus can take that hopeless end and turn it into an endless hope. Are you at a dead end? I invite you to take that problem that situation and your own life and give them to Jesus Christ. Join me in a word of prayer. Heavenly Father, we come before you with hearts full of trust and faith, knowing that you are our deliverer in times of trial, as your word reminds us in 2 Corinthians. Even when we feel burdened beyond our strength, we trust in you, the God who raises the dead and delivers us from all trouble. Just as you delivered Paul, we trust you will deliver us, and we give thanks for your mercy and grace. And Lord, as the upcoming presidential election approaches, we lift America to you. We pray for wisdom and discernment for all citizens, especially Christians, that we may seek your will above all. Help us to stand firm in our faith, united in love, and guided by your truth. May your hand be upon this nation, guiding it back to righteousness, peace, and unity. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Friday. Everybody's been working for the weekend, and here it is. Do something good with it. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow down 54 points. The NASDAQ down 66. The S&P 500 down 19. And the Russell 2000, our man in the street, down almost 15. So we're in the red, but not deeply in the red. In the commodity basket, crude oil up 9 cents, trading 72.04 last. Gold up $31.90, trading 26.4630 last. That's a gain of almost 1.25%. Silver up 13 cents, trading 31.54 last. In the Asian markets, at the close, the Nikkei posted a strong gain of 568 points. It's 1.5%. Shanghai was basically unchanged on the session. It was almost 1 point. So it is green, 0.79. Sort of a non-starter. The Hang Seng gained 245 points, which is almost 1.5%. And in the European markets at the close, FTSE down 98 points, almost 1.25%. The DAX down 271 points, almost 1.5%. And the CAC down 115 points, just over 1.5%. So we had a green day in Asia. It was a red day for the UK. And so far, it is a red Radio Friday here in the US of A. Let's take a look at some of the news happening around the world. The late billionaire Mohammed Al-Fayed has been accused of sexual assault by more than 20 female former employees of Harrods, 5 of whom accuse him of rape. Al-Fayed, who died last year at age 94, owned the British luxury department store from 1985 to 2010. A BBC documentary released yesterday alleges Harrods failed to intervene and even helped cover up the abuse claims. The Egyptian-born businessman, whose son Dodi's relationship with Princess Diana was portrayed in The Crown in 1997, but was never formally prosecuted or convicted. Harrods' current owners have expressed shock and apologized to the victims. And speaking of sexual assaults, you heard it here first on CFRN. Diddy didn't kill himself. Sure, plenty of you know exactly what I mean. Now, speaking of killing himself, this is a sad note. Freddie Owens is set to be executed by lethal injection today at 6 p.m. Eastern. The execution will mark South Carolina's first execution in 13 years. It comes after Owens' co-defendant recently retracted allegations against him. In 1999, Owens was convicted of killing a 41-year-old convenience store worker, Irene Graves, during a robbery 2 years earlier. Surveillance footage shows a man named Stephen Andre Golden and Owens conducting the robbery. It's not clear, though, who fired the lethal shot. This week, however, Golden retracted his allegation that Owens was present with him, instead saying a third unnamed person is culpable. Following his sentencing, Owens was charged with killing cellmate Christopher B. Lee. Owens says he did so in anger after what he maintains is a false conviction in the Graves case. Today's execution will mark the U.S.'s 14th execution this year. Wow. Times they are changing. Guess we're turning the page back instead of forward. Republican presidential candidate Donald Trump is not letting up in his criticism of Jerome Powell following a jumbo-sized half percentage point interest rate cut made less than 2 months before the November election. Everybody's suspicious of that. It really is a political move, the former president said Thursday during an interview with Newsmax. Most people thought it was going to be half of that number, which probably would have been the right thing to do, Trump added. So it's a political move to try and keep somebody in office, but it's not going to work because the inflation has been so bad. And while they tell you, oh, first it was transitory, now it's gone. But have you been to the grocery store lately? Or the gas station? Now I know when they give you those numbers on those econ reports, they take out food, they take out gas. Who needs that? The remarks were the second time in 2 days that Trump argued the central bank may have played politics in an attempt to help the current Democratic administration, which includes his opponent, Vice President Kamala Harris. On Wednesday, he also made an additional point that the bigger cut was also a sign of a weak economy that he claims was brought on by the same Biden-Harris administration. You don't have to be a rocket scientist to figure that out. From Bloomberg, an action-packed week on Wall Street ends with a bang as index tracking funds are set to reshuffle $250 billion of shares just as a triple witching trading event hits. Equity gauges from the S&P, Dow Jones, Russell, will be revamped today, with this quarterly activity forecast to be the busiest in almost 4 years, thanks to tech-driven market gyrations. Apple Incorporated's weighting will be increased in key benchmarks after Warren Buffett's recent share sale. At the same time, the new S&P index capping rules, which govern allocations for the largest companies, are scheduled to kick in, with fresh demand among benchmark trackers for the likes of Apple and new additions to the S&P 500. Palantir Technologies and Dell Technologies, computer and software shares, will buck the broad trend of net outflows for other industries, estimates Piper Sandler and Company. All told, tech names are expected to see $40 billion of net buying, with Apple making up the bulk of it. Okay. U.S. Department of Energy said Friday it plans to award $3 billion to 25 battery manufacturing sector projects in 14 states as the Biden administration works to shift the supply chain away from China. Projects will increase domestic production of advanced batteries and battery materials and follows the adoption of U.S. EV tax credit rules to shift battery production and critical minerals away from China. We'll see how that works out. Sugar prices are surging as fires and drought slam fields in top grower Brazil, threatening higher costs for sweets and desserts. Raw sugar futures headed for their biggest weekly gain in 16 years. Wow. As traders digested the extent of crop damage from the blazes and a blistering heat wave in the nation. Now, if you read the back of packages, it's hard to find anything these days that doesn't have sugar in it, even dog food. Why? Because of its highly addictive nature. They say it's more addictive than heroin. So, if everything in the grocery store has sugar in it, and sugar is hitting its biggest weekly gain in 16 years, guess what's going to happen to that inflation at the grocery store? And from Bloomberg, the British pound got a fresh spur this week. The strategists from JP Morgan, private bank State Street, and global markets and Jefferies say those gains are looking increasingly fragile. The Bank of England's decision to hold interest rates on Thursday, after the Federal Reserve delivered a jumbo cut the day before, has lifted sterling to its highest since March of 2022 versus the greenback. Pound is the best performer in the group of 10 nations this year by a long stretch, with bets for further strength near the highest in a decade. And that is the news. Hang on 1 second. Okay, well, let's take a look at Logic 247. That's our 24/7 around the clock E-mini alert service. Now, it's not just E-minis. It's also crude and gold, sugar, euro, bonds. We are currently in week 320 of Logic 247. This recap was done at 6 a.m. Eastern this morning. So Valerie will do the final recap for the week this afternoon. Oh, probably around sometime between 3 and 5 p.m. Eastern. We're in week 320. Over the last 320 weeks, we've issued over 17,800 individual handcrafted alerts. I think we're almost up to 17,900. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 52 alerts. One never triggered, still waiting on the outcome of 14. That gives us 37 actionable alerts, of which 5 or 14% would have been stopped out based on market structure and that simple process that we teach all of our passport holders. Now, each logic alert has an entry price, an initial target designed to help you get your goal for the day, additional targets quite often, and then a final trade to target. The purpose of the alerts, the logic alerts, is not for you to trade. They're to help you learn how to read a chart. You take the logic alerts, you study the 30-minute chart, you draw horizontal lines, and pretty soon it starts to make sense why that's the entry price, why that's the initial target, and then also where those additional targets come from. Let's say you got an alert with 4 targets, okay? From each target to the next target, that is a window of opportunity. And if price gets through that target, then there's a window of opportunity to the next target. So you can look at them as targets, you can look at them as obstacles, either way. But if you use them properly, they will help you learn how to read a chart. Now, long before we had Logic 247, probably over 600 weeks ago, because we've had Logic 247 for 320 weeks, we had our original alert service, the concierge trade alerts. Now, the logic alerts can come out anytime around the clock, 24/7, because futures trade around the clock and we have traders around the globe. But the CTAs are published as a static report shortly after the Globex open each evening. Last night they came out right at the open. Okay. Now, if you're a member or trial member, you can read all these instructions up here. Explains about the BBC, about the weekly trading zones. Very important information, both for members and trial members. Make sure you read that. Every one of our members had every one of these targets right at the open last night. It's rare that I'm able to get them out right at the open, but last night I did. I was getting ready for the members only workshop. So, now that we've corrected our daily chart to reflect the Z contract, we had everything else switched to Z, and then a couple of members noticed yesterday that I hadn't rolled the daily chart forward. So here's the daily chart. And the low is still the low. That part doesn't change, April 19th. But we got a new all-time historic high yesterday. 57.97.5. Now, why was that the high? Because nobody was willing to pay 57.56, one tick more. Interesting, right? Yeah. We have an inside day today. After a wide-ranging day like yesterday, a day of quiet consolidation is not unusual. In fact, it's often quite common. So we've been all the way down to the 50% fib extension. Yesterday we hit the 62. That was the high. Now last night during the workshop, I redrew. Even though we hadn't hit the 100% fib extension yet, I went ahead and redrew during the workshop last night. So this is the tool you use for fib extensions. Okay, this is your retracement tool. On the price extensions, you left click it, and it turns that into that. But we're not going to draw anything, so let's just get rid of that. There we go. So we connected this swing low from August 5th to the high of September 3rd, and then connected that to the retracement low of September 6th. And yesterday, when we put in that new all-time historic high, based on the new fib extensions, we hit the 62% extension. The 100% fib extension is up here at 60.17 and change. So we got quite a bit of distance to go from 5,800 to 60.17. That'll take a while. That's if we continue climbing. Now we had a big red candle all the way down to the 50% fib extension today. Just below it was potential support at the step line, then blue and climbing, then the 38, and then the BBC. The green line's called the BBC, bull bear cross. Price crosses above it, we're bullish. We anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. That part's pretty simple. Leg, retrace, leg, retrace, leg, retrace. The pull back to the BBC holds more often than it doesn't. It's really important to understand. Eventually, though, price will trade through the BBC. And as it did here, when it retraced back to the BBC, pullback held. Gave us a leg, retracement, pullback held. And then got this huge leg. It spiked the previous bullish cross, but that whole week, that area served as good support. So I don't think we're going to see anything big happen today, but I'm showing you a daily chart because institutional traders, the ones who actually move price, because of their account size and the size they trade in, they're looking at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, has everything to do with account size. So whether you trade futures or stocks or crypto or Forex or ETFs, your account's probably not large enough to trade a daily chart, but you can go to the daily chart and peer over the shoulder of the institutional traders who are looking at the daily chart. And that will give you some good guidance as to, number one, what are they doing? And where are your major obstacles? On your smaller time frames, you often won't be able to see them. So if you learn to just spend 2 minutes with the daily chart each day, before you start your trading session on your smaller time frames. You will see your trading results change for the better, hopefully, over time. Again, just make it a part of your daily routine. Come in, sit down, take a look at the daily chart, see what's happening. Remember, our indicators and our strategy are not designed to outsmart the institutions with their infinite resources. They're designed to help you see what's happening in the market, because whatever the institutional traders are doing, remember, they're moving price. As long as you do what they're doing long enough to get your goal for the day, hey, you don't have to worry about anything else. Okay? So again, you're able to identify all your major obstacles to the downside, to the upside. Now, because this is an all-time historic high, we've got one obstacle overhead at the all-time high, and then the only other obstacle up here that we're showing is the 100% extension. If and when price, and it will eventually, reaches that 100% fib extension, if we haven't rolled over or put in a new all-time high, well, we won't do it just on a new all-time high. What we like to see is we like to see price hit that 100, and then we change the fib extensions. But a number of things came together. This week we rolled over, and yesterday we put in a new all-time high. So it was just time to do it. And so we did. And if you remember and you weren't in the workshop last night, you can watch the video. It's in the vault. All right. On the ES, all alerts, logic alerts, the concierge trade alerts, all created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose many years ago. And if it's not broke, don't fix it. So here's where we opened last night on this candle. The vertical line separates today, Friday. Here's Thursday. Here's Wednesday. Back here's Tuesday. And if I scroll back further, you'll see Monday. So we got below the BBC, got red and falling. Price didn't quite make it on that trip all the way to the target, but it certainly provided enough. We opened at 70 and hit a low of 64.25. So it's 5 3/4 points in that one candle. You only need 2 points to get your goal for the day. Buyers came in, support sends us up to resistance. Resistance sends us back to support. Back to resistance, back to support. And then we just consolidate right there at the BBC. And then we drop to the short target. We overshoot it just a little bit. Support again sends us to resistance, and this resistance right here, okay, where is that? Right at the bearish cross. See that? You have a bearish cross that leads to an extended move. First time price revisits that area. It'll almost always be good resistance. If you weren't expecting resistance there, then you just learned a very valuable lesson. In fact, you could argue that all of these highs right across here, even though this was a little bit higher high, it's all the bearish cross effect. The same is true of a bullish cross. Okay? First time price revisits that area will almost always be good support. Now, yesterday we hit the highest weekly trading zone for the ES, but we've given back quite a bit of what was gained yesterday. Well, we're probably a little better than halfway because we've come off the low. We're well off the low of the day. In fact, we just got above the BBC, so we may be creeping back up to the high of the day. Okay? So first time up, second time up, third time up, fourth time up, that resistance held. If we make another run, then there is certainly the possibility that we'll break through that resistance area and cruise right on up to the long target, right where you see blue and climbing turning to red and falling. On the Dow, we opened, price was trapped, support below, resistance above, consolidated along the BBC for quite a few hours. Remember, each one of these is a 30-minute candle. Okay. Now this high right here matches up with this high right here. Okay. Resistance sent us back to support at the BBC. We attempted a move up, but we put in a lower high. So we had a high, a lower high, a lower high. Sign of weakness. Once price got below the BBC, we dropped right down to the short target and we spiked it. We spiked it, but buyers came in just before we hit this low. They don't want to miss the move, and here we go. So now we need to overcome this high and this high. We really need to get up into this area here, and then we can trade up to this high that was put in yesterday. But don't be too quick to jump the gun. Make sure price clearly overcomes these highs that were put in place earlier in the session. Okay, not by a couple ticks, not by a couple points, but substantially. You want to take out these highs right here. That's convincing that price is going to try to get higher, and up here is the highest weekly zone for the week. On the Dow, price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. And again, the pullback to the BBC holds more often than not, until proven otherwise. Publish the zones every Monday morning, 6:15 a.m. Eastern, since December 14th of 2009. So almost 15 years. The Dow is getting closer. You should really keep an eye on this. Once we get up here, you'll have a pretty decent opportunity to get your goal for the day. But until then, you should expect that you're going to run into the same brick wall that the previous candles ran into. Okay? So I'm saying don't jump the gun. Just be patient. Let the trade come to you. On the Russell, here's where we opened. And we were below the BBC and above the BBC and below and above, and those are not good fertile trading conditions. Finally, after the London Open, we made the drop pretty much to the tick. We spiked it by just a little bit and hit the short target. Now, that's based off this support right here. See this rounding bottom right here? Talked to you about that yesterday. Support sends us back to resistance, back to support, back to resistance. Looked like we were going to break out to the upside, but we did not. That's a sign of weakness. So that took us back down through the short target. Got a leg and a retracement and a leg, and now we've got a retracement, and it's attempting to retrace to the BBC. We expect that to be resistance. Pullback holds more often than not, whether it's pulling from above or below. But again, eventually price will trade through the BBC. That's why you have to be patient. It's going to consolidate, and then it will continue higher, or it will find resistance and give us another leg to the downside. We got 1, and a retracement, 2, and we're in the middle of a retracement. So you should anticipate a third leg to the downside until the BBC is overcome. And then before you start going long up to the long target, you want to obviously get above this very crowded area right here. Get all these hours we consolidated. Okay, the NQ. Here's where we opened last night. We dropped, bounced up to the BBC, resistance. When red and falling gets directly below price, that's potential support because it's probably on its way to turning into blue and climbing. So support sends us back to resistance, and then there's just consolidation there, difficult trading, not a lot of follow through. Then we get a leg down and a retracement to the BBC with the tick, and it holds. And that drops us to and through the short target. Support sends us looking for resistance. This resistance here, is that the opening candle? Yep, that was the 9:30 candle. Okay. Now, Michael trades a 9:30 open. I don't. I like to wait till the first 30-minute rush is over, and then if there's any 10 o'clock news, so sometimes for me it's more like 10:15. Price came all the way down to the zone. Yesterday we ran up to, on the NQ, the highest zone for the week. Remember, when price rallies up to a zone, we expect resistance till proven otherwise. And when price drops to a zone, we expect support till proven otherwise. We're getting above the BBC. And so if we get up to, say, 40, call it 45, you should get a move up to 75. That's 30 points. You only need 5 points to get your goal for the day on the NQ. Crude oil. Here's where we opened last night. That same consolidation we've seen on every market at the BBC for just hours. Above it, below it, above it, below it. Those just aren't good fertile trading conditions. Here we got a drop. Came within a few ticks. Low 70.55. We missed it by 5 ticks. Market found support off this area right here. Sends us back up to the BBC resistance, which sends us back down to the target support. And now we're just shy of the long target. And we still have one more zone overhead. Okay. So short target almost to the long target. Goal, having a big day. Here's where we opened last night, found support at the BBC, made a run up to the zone, consolidated, hit the long target, and notice price, step line, blue and climbing. Price continued to climb. Now, when price slices, 70% of the time, when price hits a zone, you're going to get consolidation. 20% of the time, you're going to get rejection. 10% of the time, the slice. So, price sliced through the zone on a 30-minute chart like it wasn't even there. But when it ran out of steam, it retraced back to the zone it sliced through. Support. Price drops to a zone, we expect support. They give us another leg to the upside. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. And so we pull back to the BBC and the zone, support times 2, and that gives us this leg to the upside. And the highest weekly zone is sitting up there at 26.80. Here's where we opened last night. ran up, hit our head on the BBC resistance, but see red and falling, it got directly below price. That becomes support on its way to becoming blue and climbing, and that took us up to the target and up to the zone. Resistance sent us back to support at the BBC, and then we got a leg and a retracement, a leg and a retracement. See how the pullback to the zone held. And then yesterday, I drew this line in right here, right above where blue and climbing was rolling over to become red and falling. I drew that horizontal line in, and I said, we'll see where that's at tomorrow. So did we spike it a little bit? Yes, we did. But did it ultimately become a good area of resistance? It did. Set us all the way back down below the zone, sent us to the bullish cross. When you have a bullish cross that leads to an extended move, just like I explained on the bearish cross, first time price revisits that area as it did on this candle right here, you should expect that to be good support until proven otherwise. Okay, so now we've gotten above the BBC, we've gotten above red and falling. If we stay above red and falling, it's going to curl up and become blue and climbing. That could take us back to the high of the day. And then above that, we've got a zone at 3188/89. That is not the highest. The highest zone is still considerably higher. On the euro, here's where we opened last night. Pull back to the BBC, pull back held. Got a leg, got a retracement, and a leg. Hit the long target. See that round top there? See that? That's what I was showing you guys yesterday. So, all right, that covers all the markets. Michael's here. He'll give us a recap of what happened in the live training room this morning. Yes. And what he's done with that. Do some trading on TradingView. And then I'll come back with the good board for the day.
All right. Everything looking good?
Yeah, it looks good.
Excellent. Here we go. We'll go to the home page. All right. Excuse me. All right. Good afternoon, everyone. Today is Friday, the 20th day of September 2024. Wow. Just can't believe that. Anyway, it is the 20th day of September 2024. If you have not taken a free trial with us, go here to mytradingiq.com and click on the purple button right here. When you click on that, there's no credit card required to sign up for the trial. All right. Click on that. It's going to bring you to this registration page where all that we ask for is your name, your email, your phone number. There's 5 multiple choice questions. You can give us those. If you have a Ninja Trader and you want to chart with Ninja, give us your machine ID. But we recommend you chart with TradingView. If you have TradingView, give us your login ID. Okay. I mean, trading with Ninja Trader is great too. You can trade with Ninja if you want to, but the newest stuff we have on TradingView. Give us your TradingView login ID. Once you do that, we'll enable the indicators for you, so your indicators can be indicating for you at the very beginning of your trial. All right. All right. So today, this is not today. Today, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. I have to say that every time I show this. Today, as I said, is the 20th day of September 2024. We're up 220 ticks on the NQ. We got back to break even on the Russell. We're up 30 on the YM. Got back to plus 30 on the YM. And minus 6 on the ES. We're never positive on the ES today. The other ones, we were negative on the YM. We got back to positive. We were positive on the Russell. We got to negative and then back to 0. In the NQ, we were negative on the NQ. And then we got positive on the NQ. So our day started out a little bit rough. That's why it took 27 minutes and 8 trades to get to the goal for the day. Now with 9 contracts on, when we hit that target number, on the goal number, we were actually over the goal by a significant amount. And it put us at $2,070 with 9 contracts. All right. We ended up taking another 13 trades after that to put us at 21 trades on the morning session. And on the month now, that puts us at $13,690. So for those of you guys who are not following along, when we completely moved to larger time frames for one thing, and to reducing the indicators on the chart, things have gone much better. This is our best month of the year right now. All right, for those of you who are not noticing that, we're at $13,690 with one contract. Over 14 days, we're averaging $977 per contract per 2-hour business day. On the year now, we're at $83,490 over 177 business days, averaging $471 per contract per 2-hour business day. Following the 24/20 blueprint, starting with one contract and adding one per month. Miles, this is if you get your goal every day and you work your way up slowly, adding one contract per month, you'd be at 9 contracts now. If you started in January with one, you'd be at 9 now. And so far in the month, just this month, you would have worked 176 minutes. So that's what, a little under 3 hours this month. We're almost all the way through, but we're 3/4 of the way through the month is where we are. We would have worked 3 hours so far getting your goal. You would have traded 58 times getting your goal, and you'd be up $22,302. That's if you started the 24/20 blueprint. You did everything just like I did. You should actually be doing better than me, right? And this should have gone faster, but I was actually trading, more contracts up until this month. I was trading, well, it started out with 13, then 14, 15, 16, 17, 18, 19, and 20. And it's harder to get the goal for the day when you have more contracts on because you get a lot more slippage. So this should be even better results. One of the changes that I made a few months ago was to start at 9:27 instead of 9:15. And usually at 9:27, if you get a trade trigger right at 9:27, when the markets open up, it's going to trigger and it's going to hit the goal for the day. Look at all those at once. First trade of the day. Didn't have as many so far this month, but we had our share of them. Out of the 14 days, we had 1, 2, 3, 4, 5, and yesterday should have been one of them. Also, so we should have had 6 out of 14 so far. Pretty good. Anyway, that's 24/20 blueprint. If you were to add one contract a month, be averaging $2,322 per hour. You would have only had to work 53 3/4 hours, and you would be averaging $2,322 per hour. Following the 24/20 blueprint all the way through, starting in January of last year and adding one contract a month, all the way till I got to 20 contracts last month, we ended up averaging $7,111 per hour. Right. We ended up working, I don't remember, 3,225 minutes. Sorry, that is this year. 3,225 minutes this year. But last year we worked 3,000. No, that's not last year. If you add it on to last year, I don't know what the total was for last year. Total number of minutes last year was, where's the total number of minutes? It's going to be in here somewhere. This is the total number of hours. Oh, it would be that times 60 plus that other number. And anyway, I don't know. I'm going down a rabbit hole here. I don't really need to go down. But where are we? What month is this? Last month. Okay, so that's where we are anyway. Following 24/20 blueprint. Be slow, steady, consistently profitable. That's where you want to be. All right. Now I know you had said you were up and then you were back down, and it sounds like that is because you were not doing consistent things. Either way, let's jump into the trades. We had a fair amount of trades today. Every market but the CS, we only had a couple. The YM, we start out on the YM right here with a stop out. That was our first trade of the morning. We stopped out on the YM. The next trade on the YM was right here. We picked up 30 ticks on that one, goes to +5. Then the next trade on the YM, all right, we got 20 ticks on that, got us to 25. And then we got 5 ticks on that, that got us to 30. Okay, I don't know why those little arrows are so tiny. But got us to 30 overall. And that's what we ended on the morning session at 30. During the break, there was just one trade right here during the break that did not put in a higher swing. It did move 19 ticks into profit. That was the only trade. It got flat, the ribbon got flat, and there was nothing else to do there during the break. Okay. And that was the YM. I don't know what's going to happen here the rest of the session, but I know that's what happened there. All right, look at that. You guys remember this morning I drew that circle in there? I said it should be about this time, and it should hit about this level. That's the first time I've looked at that. It nailed it exactly. Look at that. That was pretty good. Did I nail that? I feel like I nailed that one. Anyway, on the Russell today, we started out with a 10-tick profit there, and 10-tick profit there. I got us to plus 20. Then we stopped out on this one. I don't know how I managed to stop out on this, but I managed to stop out on this. I think I took this one right here. It's not pointing in the right place. I took that one right there. That's what it was. And it pulled back and stopped me out to the tick, and then it ran up. So that put me at -5. And then right here, I got the +5 on that. And that put us back to break even on the day. And I had said this morning that this is what I expected it to do when it was over here. I was saying that it should pull back up to here, and it should do this leg, and it should do it down to here, and it should take this amount of time. That was using the diamond principle. That's what I applied to that to come up with that stuff, but I just eyeballed it this morning when I was doing it. I was saying if it pulled all the way back up to here, then it should go all the way down to here. Using this right here as my leg length. Anyway, during the break, there was one trade right here that went enough to get the stop to break even, take some profit. It pulled back. You wouldn't have done that because you didn't have a higher swing. Then you had this one right here that did actually put in a higher swing by a tiny bit. That would put you into this trade right here that did actually put in a higher swing, just a tiny bit. That's setting up for the next one right here. Now, this whole move right here is, look at the whole thing. Okay, the whole thing like this. This is a retracement of that leg. All right. You see over here, if you look through this, if you crunch this up and you look through this here and this here, this is a whip that happened right in between all this garbage right here. The markets aren't really giving you anything to go on as far as this is concerned. So all you have is what's in front of you. It's not really showing a strong trend at all. I'd say if you got your goal for the day, put the mouse away and don't do anything right now. Right? It's about to set up a trade, but I wouldn't do it right now if I already had my goal for the day. The ES, now we only had a couple of trades on the ES. Here we were. Well, I guess we had more than a couple, but a couple that actually moved us in price. We had this first one right here. Somehow we got to break even on that. I don't know how. Then we had this one. We stopped out -10 ticks. We had this one. We got to break even on, and we had this one. We got +4 ticks on. Now, in this, I was using this as my leg length, saying that if it pulled back up to this level, it should go down to this level. And you see, if you take that leg length that I used this morning and you reapply it down here, you have the same thing. And then take it a step further. And I want to say you could reapply it going back, but the legs back up got a little bit bigger when it was going back up. Okay, when it moves up from here to here. That's pretty close to the leg length that you're going to use on the way back up. You see right there and right there. And then it just got a whole bunch of sideways action until you get all the way over here. I guess you could use this right here or this right here. And that's where it is right now. So again, if you got your goal for the day, I would be careful trading right now. I probably wouldn't trade again if you got your goal for the day. We ended up with -6 on the ES, -6. Right, and the NQ is where we had the most fun, as we usually do. And we hit Alt and back on this, and get back all the way to here. There it is. Right. So I told you we had a rough start this one. We started out with a stop out on the NQ. We're -36 ticks there. Then we had a break even there. And then we picked up 48 there. That put us at +12. Then we had another. Here we had 16 ticks, it looks like, to get us to 28. 16 on that one to get us to 28. Then a 48 to get us to 76. Another 48 to get us to 124. Then another 48 somewhere to get us to 172, a break even. Then another 48 to get us to 172. Then a couple of break evens. Then another 48 to get us to 220. Okay, and then this all happened at the end of the session. I was saying that this is what I think the market's going to do. It was when it was over here that I was thinking it was going to do this. And it did go up, it did come back down. It didn't continue the downtrend though. I was saying if it went down below this level here, this would be this pullback, and this right here was a 50% pullback, which is what I was trying to illustrate in here. 50% pullback, that leg up, and then another move up, and then another 50% pullback, which is what I was trying to illustrate right there. And then another leg up that didn't go above the prior swing high, which is kind of right there, and then a leg down that went below the prior swing level, which is kind of what happened right there. That's what I was trying to illustrate to you right here when I was drawing it. You know, when we didn't have all this stuff to look at in the market before all that happened. But anyway, we ended up with plus 220 on the NQ from the morning's trading. But during the break, there was, right here was the first trade. Now that probably would have stopped me out to the tick, probably. Okay. The next opportunity was right here. That would have stopped me out too. Then it just barely put in a higher swing, so I wouldn't have done anything all through here. I would have been waiting for it to get a higher swing, like over here. So I would have taken that, and that also would have stopped me out to the tick, I think. My stop is 36 ticks. So this is a 31 range bar, so my stop is 9 points away from the top of the bar. 88.25, what was the low of this bar right here? 79, would have stopped me out to the tick, exactly, to the tick. Had another one here that would have been enough to get the stop to break even. Another one here that would have given 48 ticks. Another one here that would have given a break even. And it's setting up right now, almost giving us another trade set up on the short side. Not quite though. Okay. So again, the whole idea is to get in there, get your money, get out, and not trade anymore. And that was easy to do today. Well, it wasn't. I mean, today was a little complicated because I stopped out a few times right at the beginning, but most of the time it's easy to do. Right? Today was a little complicated, and I still managed to get, you know, what we end up with $1,175 a contract this morning. So it's, the opportunity was there. I think the opportunities the rest of the day are going to be diminished, but it is what it is, right? Okay, so we are now into, oh, I just remembered something. I'm right done. Okay, we are now into, well, we're past 1 o'clock, so the YouTube stream should be going right now. So for everybody that's popping on YouTube right now, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. When you click on that, it'll be brought to this registration page. Just fill out the form. Okay, fill out the form. Give us the information we need. Get a TradingView account, right? You can do it for free. It's over the weekend, so if you do the free version over the weekend, that's fine. We'll set you up so you can have one chart with the indicators, the 2 indicators that you need on it. I will set you up with that, and that's it. That's all you need. Now, you do need to send us your TradingView login ID. If you don't have TradingView, if you don't have it, go here to mytradingiq.com, click on Trading Platforms right here. Watch this video. It's 3 minutes long. It tells you how to get the charts, right? Click on this thing. It's going to bring you to this page. Go for the monthly. Go for the essential. If you want to just do it over the weekend, then you don't need to get real-time data right now. You don't need to get live data. But if you do want to trade with me next week, then you need to make sure you have real-time data, right? It's $7 a month to get the real-time data. Okay. This is a month-long free trial. If you want to do this, they don't actually bill you the $14.95 at the beginning. They bill it to you at the end of the month, so you can get that for free too. Okay. All right. So let's see if we have any trades. This I would really like to see put in a much higher swing before it pulls back. This I would like to see a higher swing before it pulls back. This crunched up the ribbon and didn't give us anything, and this didn't get into the oversold. All right, that's a lot of stuff. So we didn't get anything there. Let's go look at some other things out here. Let's go out a little bit further. We'll see what the Bitcoin is doing today. Bitcoin is not having a good day yet. Not quite yet. All right, we did have a long back here a few days ago that didn't finish. Let's look at what's next on this. I think we have Mara. All right, stocks. Mara's having a tough time here too after all this consolidation that went through. This is a 30-minute. So we're looking back to last week right here. Yeah, Mara's having a rough time here too. This is a 50% retracement right here. So what it should do, I think I was saying last week, we should see it drop down to here, 1317 over the next month. That's what it should do. What else do we have on this? Well, one more. Let's see the bonds. This is the bonds. These are the bonds. So right here, there was an opportunity right there. Is that today? Yeah. So the bonds, the zero bonds at 31.25 a tick, I think, is what you get. And that's why I have it on the 3-range chart. All right, they don't move around very much. This is actually quite a bit of movement today for the bonds. That much movement in one day is a lot. It did give one nice trade early on. And we'll go one more and see what we got going over here. Back to the NQ, but this is a 100-range NQ. Now, those of you guys that were in the partners meeting last night, I had showed this thing that triggered on my phone yesterday. This thing that triggered on my phone where we had those 4 or 5 alerts on 100 range. And every one of those was a 100-tick win. We went over this in the partners meeting last night a little bit. If you want to go on a larger time frame, and this for anybody that wants to go to a larger time frame, go to a larger range bar time frame. When you're using the TV trades trigger and you're using the ribbon, the bigger the time frame, the higher the probability that it's going to be the pivot bar when you get the trigger. It's going to be the pivot bar. Okay, like that one right there, like that one right there, like this one right here, like this one right here. All right, and going in the other direction, that one right there, that one right there, that one right there, that one right there. The larger the time frame, the higher the probability is going to be the pivot bar. Now, the risk on this for 100 range bar, I would use 110 ticks risk. All right, it's going to be a little bit bigger than the bar, just a little bit bigger than the bar. It's just going to be beyond the bar that you got you into the trade. All right, and the same stuff that we use on a smaller time frame, you're going to use in here. You know, the minimum that you expect is that it's going to get to the prior swing high. So if you're going to take a 100 range trade, you want to make sure that you have 100 ticks between your entry point and the prior swing high. Okay, like this one right here. Probably didn't have 100 ticks in between there and there. This one right here sure did though. This one over here, just barely it looks like. Right, 71 up to 85, that was not 100 ticks. This one definitely had it. This one I don't think had it. 89 up to 07. Almost, but not quite. It needs to be 25 points. Because what you anticipate is that it's going to get up to the prior swing high, right? This right here was 76 up to 18. So that was easy right there. Okay. The thing about this is if you don't want to risk the 110 ticks with, with one contract on the regular NQ, 110 ticks is $550. If you don't want to risk $550 on a single trade, go to the micros. Okay, you can cut that in half or even less if you go to the MNQ. We talked about this in the meeting last night. Go to the MNQ. Now the micros, you have to trade 5 contracts to cut that 550 to 225. But if you want to cut that 225 down, you could trade 2 contracts or 3 contracts to cut that down to 100 or less. If you trade it with 1 contract, 55 ticks is 55. I'm sorry, 110 ticks is $55. So if you go with 1 contract, 110 ticks is $55. 2 contracts, 110 ticks is $110. You can get that risk down and still get the great gains. Okay, if you want to do that with the micros. And, the micros, for those of you who don't know, they matured a lot over the last 2 years since they were introduced. When they first were introduced, I don't think the brokers even knew what to do with them. The introducing brokers, because they didn't know what to charge for commissions, and they were ripping people off left and right. And people were trying to scalp with the micros, and you can't scalp when your commission is $3 for a micro. We're only making 50 cents a tick. You got to make 6 ticks to break even on the trade. You can't really scalp like that. But they've changed all that, and now the micros, at my broker, the micros are 50 cents, and and so you can trade 5 micros, have $2.50 your commission to trade 5 micros, and that cuts your risk in half. Your cost is about the same as it would be if you're trading a full contract. It should be right around $2.50 to $5, somewhere in there. For me, it's like $2, but I trade a lot. Normally it's going to be like $2.50 to $5 it's going to cost you to put on a regular size contract. So if you cut all that in half, you want to cut your risk in half, the amount of money that you have at risk on a single trade 5 micros, and that's half the risk. And the cost is about the same. The cost is about half of what it should be. Right? That was a lot of words. Did you all get that? Does anybody have any questions about any of that stuff? So you can just flip back and forth between the micro and the regular and Q. You don't need to change anything on the chart. As a matter of fact, you can flip back and forth between different charts too. The things that because this is 100 range, you can't trade the ES on 100 range, but if you came over here to the ES, if we go back to 4 right here. There it is right here. Just go back to 4 for a second here. We didn't have any trades, so that's why I was kind of taking up all this time, filling up all the empty airspace here with telling you about all this stuff. If you were to look at this, for instance, the ES on the 7 range, I looked at this yesterday with you. If you just want to trade gold instead, I'll just go into the GC1 exclamation point. That's the leading contract in gold. I wouldn't do gold on a 7 range. I'd do it on a 9 range. Okay. And the reason I do it on a 9 range is because of the numbers that are involved. Like right here, if I were looking for a down close of this bar, we got a high here of 47.2. I'd be selling 46.2, 10 ticks away from the top of the bar. With the 9 range, you do 10 ticks away. It's easier to do the math in your head, right? Makes sense. So we don't have a trade set up here, but if we were trading this, the same stuff applies, all the same things. The ribbon is spread, you come out of the oversold, you take the trade. Ribbon is spread, you come out of the oversold, you take the trade. With a 9 range, the stop would probably be, why would the stop be away? I probably have stop at 12 ticks with a 9 range. I have a 12 tick stop. And what do I have? It's all here on here somewhere, I think, isn't it? Trade rules with a 9 range. I don't have a 9 range in here. I have an 11 range with a 15 tick stop. With a 9 range, I'd probably have a 12 tick stop right in the middle of these two. The 9 range would have a 12 tick stop, and I'd still have like a 45 target on it. But with the gold, you're not going to get 45 ticks at a time very often. Right? The big 40 tick runs, 50 tick runs, they happen, but I would exit with a trailing stop. Like if you get into a trade like this one right here, you'd be anticipating it's going to get up to the prior swing high, right? That's what we anticipate from every trade. So the entry point would be right about here at 41.2, and the prior swings up here at 43.3. It's 21 ticks. So expecting it to do more than that, which it should do with the diamond principle. Now, some of you guys don't know what the diamond principle is, so let me draw that for you really quick. Every trade that you get into, you should expect that, and then you should expect it to double. That's the diamond principle. Okay, and the amount of time that it takes to double should be this amount of time right here. Puts you right there, right there. See how that works? Pretty good stuff, huh? That's my word, the diamond principle. I coined that one. But that's how it should work, and that's how I got to that number that I had shown you a little while ago. That I had said from this morning. I don't even know what market that was. Which one was that? Was it this? It was a short somewhere. It wasn't that one. It was this one right here. That's how I came up with that number this morning. When I eyeballed it and I drew that down there, and I said, this is where I expect it to be at this time. So, no trades. No trades. I've been talking for 20 minutes without a single trade set up. I was kind of afraid it was going to get like this. James B. Can you send me a picture of what you texted me this morning? Just take a picture of it on your screen and text it to my phone. I created something that I think you'll find interesting that I'll show to you. If you send me that picture, I'll show you something that I find interesting. All right. And if James, if you didn't hear that, and Matt, you happen to be with him, or Mike, you happen to be with him, tell him. So all these marks are kind of messy right here. I don't really want to trade any of them. That's what I was saying earlier. If you got your goal for the day, just wrap it up for the weekend. We have 9 minutes. 9 minutes left here. So I was going to tell you, there was something else I was just going to tell you. I started to go off on it. I got distracted. So, didn't we have some ridiculous news come out today? Something that was just totally unbelievable. Oh, the Canadian core retail sales. Yeah. That's what came out today. We didn't really have anything. But the Canadian core retail sales, that might be something.
Inflation makes prices higher.
It sure does. It sure does. That is something that has proven itself to be true over and over and over again ever since it was coined, inflation. All right, so we are looking here for this to get down into the ribbon and this to get into the oversold. This doesn't actually have to get into the ribbon, but this does have to get into the oversold. I really don't like the way this is working, but it's a slow grind up kind of trend. So it might give us a trade here, it might not. The yes needed to put in lower swing, so there's not going to be anything there. The YM did put in the higher swing, but it didn't come from the oversold, so we don't have anything there. And the way the YM is coming together right here, let me show you this. Right. Go back to the leg length stuff. So the way it's coming together is ugly. And it's ugly because this is our leg length right here, right? That's our leg length. And this is our leg length. Perfect, right? And this should be our leg length. So if this does a retracement right now without satisfying the leg length, not even satisfying half of the leg length, if it does a retracement right now and gives us a long trade, even though it's got a little bit higher swing right here, that's going to be kind of an ugly trade to take. All right. It didn't do a 50% retracement yet. Almost, but not quite. Let me spread it out so you can see it a little better, a little easier to look at. This is what you're looking at right here. Okay. So the 50% would have been a little bit further down. Right down here. And so this is just a little bit of a pullback with a leg up. Now, if this leg happens to get all the way up to here, that would be really bullish. But I think it's going to pull back before it gets up there, and that would make it kind of a mediocre trade because the trend is slowing down. Right? This is the leg length it should do, and if it doesn't do that leg length, then the trend is slowed down. Then you have to consider the leg length on the other side of that. Like the leg length down. This is how big the leg length down was. So this one should be no bigger than that. Okay, but you can see this is causing a rounding top right here. That stuff Dwayne was just talking about, the rounding top on the bigger picture a few minutes ago. That's probably what we're going to end up with right here, is a rounding top. And if you don't know what that means, it means that you have higher highs, and then suddenly you have lower highs. Okay, we end up with lower highs. See the rate of ascent right here was going up like that, and then it switched over like that, kind of fell over like that, and at some point You can almost project out where stuff should go. If this is the turning point, this is what should go down to. But you gotta let it all come together. Right? Let it all come together. Anyway, any questions? Anybody? Anybody have any questions about anything? All right. Well, I'm going to give you all my phone number. It is 617-943-3298. If you have any questions, you can text me at that number. If you come up with any questions, you can text me at that number. And I will do my best to get back to you as soon as I can. And there. All right. List. And I have to create that meeting. So this is what this looks like. It's painfully slow on the YM right now. The Russell did pull down and it hit the ribbon, but we're not in the oversold, so we don't have a trade there, fortunately. The ES did put in a lower swing that could pull back and give us a short. The NQ also put in a lower swing. It did pull back, but it hasn't given us a short yet. The NQ needs a down close that keeps these lines separated. 1350 down to 550 is what you're looking at on that. 1350 down to 550. Can't find my NQ down. It is, and there it is. Oh, no, it isn't. 550 is what it should have been. 550 is what it should have been. Okay. That's what it should have been. It's not what I got. But 550 is what it should have been. Okay, so now it's going to go 4 points into profit from here. And I am a full 2 points off of where I should have been in it. But it's down to 99.50, and it will. There it is. Stop to break even. Okay, so now I'm going to lock in 8, 12, 16, hang on, 16, 20. That's the goal for the day right there. 24, 28, and we're out with 28. How easy was that? We need the same trade over here. Okay, over here on the YM. This is, oops, hang on, we're gonna do that. This is doing the pullback here on the YM. So let's bring that over in view here. Okay. So it can give us a trade right here, and what you'd expect out of this trade is gonna be 59 up to 79. And what you'd expect out of that trade is for it to get up to this prior swing high. I don't know that it's going to. It wouldn't surprise me if we got the trade and it got up here, got enough to get the stop to break even. That's what it's looking like it'll probably do. And then turn down. Okay. Now, those are just my words, which mean absolutely nothing. It's just, I'm telling you about the patterns that happen again and again and again. Because I told you about a pattern that has happened in the past again and again and again, doesn't mean it's going to happen again right now. It's a pretty high probability that it's going to happen again right now, and everything that we do is based on probabilities. So this needs to get up to 90 right here, and then we'll bump the stop to break even. 90 would be about right. I said it should get up to about this level right here, about 98 is what I think it's going to get up to, about right here, 95, 98, and then get rejected. It's got to get up to 90 for me to bump the stop to break even, though. Okay. I could put a target up here at 513, which is the high of the day. Put a target up there. It should get up through the high of the day. So in that case right there, that's 23 ticks away. Isn't it? No, it's 33 ticks away. 33 ticks away. So that's okay. I'm risking 25 right now on this. On the ES, we now have a lower swing, and so the ES is coming together the way that I kind of thought it would. They're all looking to turn down right here. So this one just needs to get that stop to break even because everyone's looking to turn down. You see the numbers right here? It wants to get into those numbers up there at 95. But I say 95 to 98. Is that what I said? We'll see. We'll see. Watch the ES here. It's got a high here now, 46.6. So you'd be selling 40. 42.6, right? I'm sorry, 44.6. Sorry, 44.6. Okay, did we get up there yet? Did we hit 90? I think we did, didn't we? There it is. I'm going to bump the stop to break even. And the ES, where's my ES down? Here it is. Okay, so on this, 46.5, so it'll be 44.5. That's what I'm talking about. 64.5. My gosh, why am I saying 44? 64.5. It's like yesterday all over again. You guys remember yesterday morning where I couldn't do math? No, I can just one tick on this. Right. So this is the lower top, the rounding top that I was looking for it to make right here. Okay, that's what it's making right now. I'm just gonna look in 5. I'll get half of it. Now I'm gonna look in 10, and we'll be out with 10. Okay. There it is on the ES. Now, I like the downside of the ES right now, down to the swing low right here. That should happen right now. And this 94, 95 to 98 is what I was thinking we'd get up to before I got rejected. Who knows? It might go further, but we got 10 ticks out of it. So we're happy with that. And the ES is going right now too. I've run out of time. Guys. Ideally, we would see this go here, that high. Right? That'd be good if we got up to there. The ES is triggered. I do have another meeting coming up, so I can't wait this out. But if you have not taken a free trial with us, go here to mytradingiq.com, sign up for the trial right here. Click on the purple button. There's no credit card required for the trial. Sign up for that. It's going to bring you to this registration page. No, this registration page. This one right here. Where all they ask for is your name, your email, your phone number, 5 multiple choice questions. Answer these honestly, all right? If you say no on this one, you're not going to get any emails. Answer those honestly. Give us your TradingView login ID if you have one. If you don't have one, get one. Give us your Ninja Trader machine ID right here. If you have Ninja and you want to chart with Ninja, give us a machine ID. If you have Ninja and you don't care about charting with Ninja and you're going to chart on TradingView, then don't give us the machine ID, right? Because every time we see that, we feel obligated to enter it in for you. But if you're never going to chart with Ninja, then don't give us a machine ID, right? If you have both and you want to look at the charts on both, you can give us both, and we'll enable it for both. Okay, I should say that too. All right. So this got up to the line that I drew. You see that? It got up a little higher than I thought it was going to. It got up to the line that I drew though. And that's going to be it. With that, I guess we could pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
Excellent.
Recap of the morning session.
You're gonna ask that. Today it took 27 minutes and 8 trades to get to $2,070.
Good job.
Thank you. Thank you very much.
All right, guys, have a great weekend. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. 3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.